Okay, welcome to Price Action Trading 101. My name is BSB and I'm here to teach you how to trade for free. You heard me right. Trade to teach you how to trade for free. No paid signal groups, no paid mentorship, no, oh, this is the holy grail, whatever. No, just here to teach you how to trade completely from zero to 100 for free, literally for free. What you have to do is just follow along this segment. I don't know how long this whole course or segment is going to take. I don't know how many videos I'm going to do on this series, but stay with me till the end of it. And then, yeah, you should be able to know how to trade quicker than you thought. Yeah, so without further ado, I'll just share my screen and then we'll talk about trends. Today's topic is about trends. So I'm gonna just share my screen and then we'll just get into it. Share my entire screen. So today we're just going to be talking about trends. Okay, so we will get back to the charts later. We will get back to the candlesticks later. So let's just start from fresh. So what is trading? Trading is basically buying and selling of currencies, right? A lot of people have the idea that trading is gambling or trading is fake or trading is a fraud on the whole whatnot. But trading is not gambling and trading is far from gambling. The two they just don't correlate. They're very wide apart. The reason why I say this is because the market shows you what it wants to do. You just have to follow it. You just have to react to it, to what the market is telling you. So in simple terms, let me show you what trading is. Supposedly, you have a line, right? We have a line. This is a line, right? Now, if you are in a buy, I'll just write everything out for the beginners for everyone to follow along. If you are in a buy, right? So buy, you are saying that above 5,469, when the candle goes above here, you make money. When you buy above 4569 and the candle comes above here, you make money. And the same thing for a sell. So let's say you are in a sell, another line, then have a candle here. Your candle is below here. You said sell, so you are in a sell. This is your sell. You are selling underneath 5,355, right? That means as each candle is forming below this level, like this, you are making money. You are making money. As long as price is below this level, you are making money. And the same thing as well for an uptrend. If you buy above 5,469 and the candle keeps printing like this, you are making money. That is it. You are making money. This is it. Anything, because you said buys above 5,469, you are making money. Anything below where you said sell, you are making money. All right, cool. So that is what basically trading is. Trading is buying and selling of currencies, right? And we have different types of traders. We have swing traders, we have scalpers, And we have intraday traders. Me personally, I'm a swing trader because swing trader is where you make the most money. I don't care what anybody says, but swing trading is where you make the most money. That's where the most money, that's where the big moves happen. So, it's talking about trends, right? Trends. You see, the fundamentals are everything in trading. Fundamentals are everything in trading. It's the building blocks of how you're gonna, it's like the pillar. It's like an example. Before you learn how to do the stepovers in football, do the whole Milos, the whole back heels and all of those stuff, you first need to learn how to pass the ball. You first need to learn the basics. The basics. And the basics are trends, right? Trends. Trends. Right? Trends. So trends. 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 I'll make this bigger for you. So you guys should be taking notes. Okay, taking notes of everything, right? Trends, right? What is a trend? When I say trend, what do I mean by trends? The market moves in three ways. We have an uptrend. We have an uptrend. An uptrend. We have a downtrend. A downtrend. And we have a sideways trend. And we have a sideways trend. Or a consolidation. Sideways. But let me just say sideways here. Sideways trend. Okay, so these are the three types of markets that we have. We have uptrend, downtrend, and I have sideways trends. Okay, cool. What is an uptrend? This is an uptrend. An uptrend consists of a high. Sorry, not that one. An uptrend consists of a high, a low, a higher high, a higher low, and a higher high. This is what an uptrend is. As soon as you see this, you should be telling yourself, okay, there's an uptrend, 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 uptrend. The reason why I'm saying it's an uptrend is because uptrends are made up of higher highs and higher lows. Let me show you. So this is your low, right? A low. This is your high. This is your high right here. This is a high. So I'll just use this as H. So now, when price makes a low and a high, it has to make another low. So right now, this low here, this low here, this low that price makes, this low here that price makes, this low is higher than this low. So now here becomes your higher low. So here is now your higher low. Your higher low. This section here is now your higher low because this low is higher than this low. And now price makes a higher low and makes a higher high because this high is higher than this high. So here now this is your higher high. I hope you guys are following along. So now higher high, HH. Why? Because this high is higher than this high. And you can see now it's starting to form a pattern. You can see another higher low. So I'll just copy this one here. Deep clone, nice. So here is now your higher low. So now after this higher low is formed, what do you expect to see? A higher high. So I'll just duplicate this again. So this will be your higher high. And then price will form another higher low, then the trend continues, so forth and so forth. Whatnot. So now That's for an uptrend, and now this for a downtrend. So if higher highs and higher lows are in an uptrend, ideally the downtrend will be lower highs and lower lows. It's the same thing. So now you start. You have your low, then you have your high, then you have your lower low. So so you have your low. So right now you have your low, nice. Then you have your high. Then you have your high, H. Now you form your lower low because this low is lower than this low. So now you have your lower low. Your lower low. This is it, your lower low here. And now this high is lower than this high. So this now becomes your lower high. So now this now becomes your lower high. Your lower high. This now becomes your lower high. So after the lower high is formed, what is price going to do? It's going to form another lower low. So I'll just copy this over here. Let's copy this over here. This is now another lower low, and then price will go up. Price will go up. Price will go up. And what do you think is going to form? It's going to form a what? A lower high. Price will form a lower high. I'll just make this clear so that. And then the cycle continues. So that is it for a downtrend. So uptrend consists of, let me just write it out. Uptrend consists of higher highs and, where's the and? I can't find the and. Higher high, oh, yeah, here it is. Highs and higher lows. And now for a downtrend. So downtrend, consists of lower highs and lower lows. I want you to take extra caution into what I'm saying right now here. So now, when we say a sideways market, it's just a market doing this. It's moving sideways. It's not making any highs. It's not making any lows. So price will make a low, then it will make a lower high. Ideally, it's supposed to make a lower low. Then it doesn't. It just does. It does something like this. Then this. Price is really not following the rules. This is what you stay away from. You stay away from this type of market. You stay away from a sideways market. I'll just write this out. Do not trade sideways markets. Okay, you do not want to trade, because if you find yourself in no man's land, you are just going to get chopped. You are just going to get chopped, because right now price is not following rules. The market follows rules. Everything follows rules. The technicals follows rules. Fundamentals follow rules. Everything in life follows rules. The market follows rules. And in order for these rules to be respected, the higher time frame is always king. I don't care about people that be trading the lower time frame, like the 5-minute, 15-minute, all of those stuff. The higher time frame is always king. The higher time frame is always going to let you know what price it wants to do. What do I mean by higher time frame? I mean anything above the 1 hour. So So higher time frame, 1 hour and above. Me personally, I like to use the 1 hour because it's more clear to me. It shows me the structure well. But if I can't see anything on the 1 hour, then I move on to the 4 hour. The 1 hour time frame is always going to show you what price wants to do. Price is always going to follow structure until it wants to change. So I'll show, ideally, it's not going to be this clean on the chart, but it's similar to this. This is just a visual representation of how an uptrend and a downtrend looks like, and a sideways trend and everything. So, first of all, you have to first identify what kind of trend you are in. As as a trader, you always want to be trading with the trend, not against the trend. Because when you trade with the trend, you know, you increase your chances of success much higher than if you were trading against the trend, right? So first of all, you're supposed to identify the trend, and then you identify the trend by looking at price, if it's making a higher high, or is making a low, or is it breaking a lower low, or is it breaking above a lower high, right? So these are the three types of trends, or the three types of markets that we have. We have an uptrend, which consists of a higher high and higher low, a downtrend, which consists of lower highs and lower lows, and a sideways market, which we don't want to trade. When you see that price makes a low, then makes a lower high, then it makes equal low, then makes a high, then makes a low, then it makes a lower high, then makes a higher low. This is what you stay away from. You don't want to get involved in this type of market. You don't want to be found trading in the no man's land, right? So anything above the 1 hour is considered good, because first of all, you reduce the risk of getting a fake out, but the lower time frame tends to be very manipulative, because the candles are moving so fast. You know, the candles are moving so fast, so your eyes are just seeing everything. But when you take it slow and calm, and then the waves are, you're just following the waves, that's when you really get the full, like the full side of stuff that's really going on. Based on the time frame that you are on, the candles, these candles like these, they're going to print either fast or slow. Based on the time frame you are on, it's going to print fast or slow. So if you are on the 1 hour time frame, that means each candle signifies 1 hour of price action. So the higher the time frame, the longer that it takes price to marinate. You know, the longer the time frame, the higher the time frame, the longer it takes for price to marinate. So this is basically the building blocks of what you need to understand how price moves in the market. So you need to identify the type of trend you are in, and then which side of the market that you want to be in, right? I trade the 1 hour time frame. You should be trading the 1 hour time frame or higher as a beginner, to really understand the depths of stuff, really comprehend of what's going on, and the whole whatnot. So I don't know how long this series is going to be, but this is day one of price action trading. So these are the types of trends we have in the markets. You guys should go ahead, take screenshots of what you need to take screenshots of, and then anytime that I get any videos, I'm gonna put it out there for you guys, so that you guys can learn from, so that you guys can equip yourself with the right knowledge. So I'm gonna just show you a quick chart of how it really looks like. So right now, let me just go back. Perfect. I just wanna perfect. So like I was saying, you can see this is a clear, nice uptrend. This whole zone. This whole zone from the bottom here to here. Why do we say it's an uptrend? Because like I said earlier, we have a low, then we have a high here, then we have another higher low over here, right? Then you can see price makes another high, you see, and now price makes another low, another higher low. You can see this is beautiful. You can see price made a high, another high, and then now price makes another higher low. You can see. So if I'm to draw the pie now, this is how you're gonna see it. You can see it. Price makes a high, a low, higher high, then a higher low, then a higher high, then a higher low. Then price makes a higher high. Now price is making a higher low, right? So let me show you a low. Then then you make your high, and then now you make your higher low, or higher low, and then price goes on and on. Then your high, then high low, high high, higher low, high high, higher low, and price just keeps on going. You see, so that's all that you need to understand in a trend. This is the type of market that you want to be trading with, not against. You want to be going where price is going. Follow what price is telling you. Price is making higher highs and higher lows, meaning you are in a bullish market. And then I'll show you another example of a consolidated market that you don't want to be trading in, so that you can avoid it. I know right now this whole chart looks kind of messy. You might even be confused of what you're looking at, but don't worry. You get the hang of it. So here, this is a perfect example of a consolidated market. Here, this whole area here, this is a consolidated market because price was just being chopped. You can see price made a low, then made a lower high, then made a higher low, made a higher high, then made a higher low, then made a higher high, higher low, lower high, higher low, and then yeah. So you just want to stay away from this market, right? You just want to stay away from this type of market like this to avoid yourself making unnecessary losses. So yeah, that was today about trends. I'm gonna keep this up for a few more seconds for anyone who needs to take a picture, whatnot. So here you go. I'll keep that for 5 seconds. So 5, 4, 3, 2, 1. Good. Okay, so that is it for trends. Stay tuned for more uploads. I'm gonna upload the trends, how to get into a trade, and then how to avoid making unnecessary losses. I trade 3 steps type of way. I trade the indication, the correction, and the continuation. Is a 3-step process that tells me when to get into a trade, when to exit the trade, and then the confluences that I look for before I get into the trade. So that being said, thank you guys for watching. My name is BSB, and then I'm gonna teach you how to be a profitable trader. Thank you so much for watching. Yeah. Stream.